Welcome back to this channel. In this video, we're going to be talking about how to get started investing in ETF. I will explain to you what an ETF is, pros and cons of each ETF, how to buy an ETF, how to pick an ETF, and how much to invest in ETF. Please stick around to the end of this video where I will share with you how to build a $1 million portfolio. So let's jump right into it. What is an ETF? An ETF stands for Exchange Traded Fund, and ETFs allow you to purchase a large number of securities, stock, bonds, or commodities all at once. You can think of an ETF like a grocery basket, but instead of filling your basket with eggs and milk, you fill it with stocks and bonds. And instead of purchasing each item individually, you purchase the entire basket all at one go. Like an individual stock, ETFs are traded on an exchange throughout the day, and there are tons of ETFs to choose from. Some ETFs are full of stocks, some hold bonds, and others track the performance of a certain market sector, healthcare, for example, pharmaceuticals, or communication. Or you can choose a certain index, for example, S&P 500 or Dow Jones. Pros and cons of ETF. ETFs are often more beneficial for a new investor because they generate more reliable returns and can help with diversification. But let's review details and start with pros. First one, low barrier to entry. There is no minimum amount required to begin investing in ETF. All you need is enough to cover the price of one share or even a fraction of share. Next is diversification. Rather than try to purchase every security individually, which would be extremely time consuming, you can quickly and easily purchase one ETF that contains an array of those securities. Next one is easy to buy and sell. ETFs are traded just like individual stock. You can buy and sell at any point throughout the day. Tax efficient. You don't pay any taxes until you sell your ETF at a profit. So you are in control of when you decide to sell and pay the necessary taxes. While ETFs are pretty great, nothing is perfect. There are a few things to be aware of as well, and let's review cons. First one is cost. While one of the benefits of ETFs is that they typically have lower fees than mutual fund, but still you need to pay fee. The next one is volatility. ETFs are not immune to volatility as a stock as well. But while purchasing ETF may be more stable than putting all of your money into an individual stock, there is still potential for swings in the market. You can reduce your risk by purchasing ETFs that tracks the entire market, for example, S&P 500 or Dow Jones, rather than purchasing ETF in one market. Next is profit. And ETFs won't give you as much potential return as an individual stock. You won't be able to make a fortune by investing, let's say, in next Google or next Amazon. However, ETFs do provide more reliable return for long-term investors. I want to mention that ETFs are great investment option for beginner investor. A new investor often don't have enough capital or knowledge to buy many stocks or to build a diverse portfolio. And ETF solves that problem by providing solid returns and diversification at lower cost. All right, so let's review how to buy an ETF. First, you need to open a brokerage account. A brokerage firm is a middleman that facilitates the buying and selling of securities. Opening a brokerage account is very easy, and you can do it online within 5 minutes. There are a lot of different brokerage firms to choose from. For example, fully serviced brokerage firm may provide financial advisory services for you, but they also tend to be more expensive. Online brokers might be your best bet if you want to trade ETFs, at least from my perspective. Many online brokers offer commission-free trading on stocks and ETF, and that's exactly what we need. And the best course of action for you is to compare each broker's feature and platform, such as Charles Schwab, TD Ameritrade, Webull, Robinhood, Fidelity, Vanguard, E-Trade, and M1 Finance, to name a few. There are a lot of them, so please review and choose the best for you. I personally choose a Charles Schwab to start my investment journey. Okay, now let's discuss how to pick an ETF. Once you open your brokerage account, you can start shopping around for a suitable ETF in which to invest. With a large number of ETFs available, it can be difficult to determine which ETFs are best for you. Honestly, the answer will be different for each investor depending on things like preference, interest, risk tolerance, level of expertise, and so on. If you're a first-time buyer, you might want to consider a low-cost ETF that tracks an index like S&P 500 or Dow Jones, or a certain market sector like tech or energy, for example. Such ETFs are cheaper than the actively managed counterparts, and the reality is that most actively managed funds don't beat the benchmark index over time. So that's a great choice from my perspective. You can check my other video about top ETFs for long-term investing that track most popular benchmarks. ETF costs may vary widely from fund to fund, so it is important to do your homework and compare them against each other. There are two basic types of ETFs. Passive ETFs, also known as an index fund, simply track a stock index such as S&P 500. Active ETFs hire portfolio manager to invest their money. The key takeaway, so passive ETFs want to match an index performance, and active ETFs want to beat an index performance. Here are some of the features that you can compare. Administrative expenses, also known as expense ratio. These are fees that go toward the upkeep of the fund. You will see the expense ratio listed as an annual percentage. For instance, a 0.1% expense ratio means that you will pay $1 in fees for every $1,000 you invest. A lower expense ratio will save you money, so keep an eye on that one for sure. Next one is commission. There is a transactional fee every time you buy or sell an ETF, and there are many brokerage that propose commission-free trading for stocks and ETFs. Please pay attention to that as well. Volume. You want to know how many investors are involved with a particular ETF. The more investors are there, the easier it may be to buy and sell your ETF. Next is number of holdings. You definitely want to compare the number of holdings for each ETF to make sure that ETF is diverse to minimize the risk. Next is performance. You want to compare how much profit the fund generate for the previous, for example, 1 year, 5 year, 10 years, or even more. This is an important consideration for long-term investor, but please note that past performance doesn't guarantee future results. Next one is dividend. Most ETFs pay dividends. You can choose to have your ETF dividends paid to you as a cash, or you can choose to have them automatically reinvested, and you can grow your portfolio with compound interest. Okay, next you will need to decide how much you want to invest. On the one hand, you need to decide how much you can allocate from your budget into investment. On the other hand, you may want to consider how much you want to get later and adjust your monthly payment or weekly payment to that. The main trick is to continue adding to your holdings. Many brokers allow you to set up automatic investment plan. So let me show you a few scenarios. For example, you are 20 years old and investing $200 per month at average annual return 8% for the next 45 years, and at your 65 year you will get $1,069,000. And interesting fact that you will invest only $100 8,000, and additionally you will get $961,000. So that's amazing, guys. Next scenario is, for example, you can invest instead of $400 per month, and the same 8% of average annual return and the same 45-year. And at that point, you will get $2,138,000. And again, you will invest only 216,000, and additionally, you will get $1,922,000. That's unbelievable. And the third scenario, if you are 30 years old and you may want to invest $700 per month and at the same 8% average annual return for the next 35 years, and you will get $1,628,000. And we can review how much you invest, and you see that you invest only 294,000, and you will get additionally like interest and grow is $1,333,000. So that's great. Just keep investing. Once you've set up an account and decided on which ETF to buy, you will need to fund your account and place an order. It is super easy and will take you a few minutes to execute. Please check my other video where I am showing my real account and the step-by-step process of how to buy an ETF. Thank you so much for watching, and I see you next time.